So this is October, November 2011, 2014, right?
Yeah.
11. This is costing some. How many units should I produce to achieve my budgeted profit? Okay. So you have sales minus variable costs. You're going to get contribution. What is contribution? Tell me. 30 minus 16.
14.
The
14, yeah.
contribution is 14 minus fixed cost is profit. Okay. What is the fixed cost is 35,000. So you get profit 95,000. This is your budgeted profit.
Yeah.
Okay. You can arrive at contribution. Profit plus fixed cost is contribution. It is like contribution minus fixed cost is profit, right?
Yeah. Huh.
So
So you got
contribution is
the
profit plus
contribute.
fixed cost. Yeah.
Huh. So
95,000 plus 35,000. Your contribution is 130,000.
130,000.
Contribution
Okay.
per unit is 14. Total
Hmm.
contribution is 130,000. So how
Then you
many
divide
units you could have sold? So 130,000
9285.7. So 9286.
9285.7, which is 9286. So you
Okay.
sold 9286 units to get the budgeted profit. So we are doing October, November 2014, paper 12. Can you give me the answer for 27th? What is the purpose of cost accounting?
To aid decision making.
To aid decision making. Okay. Now I want to find the marginal cost per unit. Question 28. What is
Yeah.
marginal cost per unit?
The extra cost.
Marginal cost means variable cost.
Yeah.
Marginal cost means the variable cost. What is the variable cost over here?
Direct material, direct labor, and variable overhead.
Okay, so what is the total?
16.
What
Oh,
is
so
the
that's
answer?
it.
Yeah.
Oh, okay, yeah, fine.
Next one.
Yeah.
Business hires machinery at cost 700 per machine per month. Each machine can produce 1,000 units. A maximum of 10 machines can fit into the factory. Factory rent is 4,900. Other cost is 2. What is the unit cost if 8,500 units were produced in a month? Okay. So each machine, one machine can produce how many units?
1,000.
1,000.
Yeah.
So I will need 9 machines to produce 8,500 units.
Hmm.
Yes. So for 9 machines, cost is 700 per machine per month.
Yeah.
Per machine per month. So 9 into 700 is how much?
9 into 700 is
6,300.
6,000.
Then you have factory rent
Yeah, 4,900
and other costs is
dollar.
$2 per unit. So how many units you're making?
1,000.
8,500. So
One second, dollar to 8,500 units.
how many units you're making?
8,500.
So other cost will be for how many units?
Oh, yeah, for that. Yeah, fine.
So this is the total cost. Let's see the total cost for 8,500. 6,300 plus 4,900 plus 17,000. So the total cost is 28,200.
Now I have to divide this by 8,500.
So divide this
So
by 8,500 units.
yeah, so 3.32. So option D. Yeah.
Yes?
Yeah.
Okay. Now which one?
Yeah.
Yeah. Can you tell
Okay.
me this one?
Yeah. So question 24. So it says
Five,
that the
five,
sales
25.
25.
Okay.
What causes under absorption of fixed production overheads? So under absorption is when budgeted is less and actual is more, right?
Budgeted activity level is?
Is less
This is
and
under absorption.
yeah. No, budgeted overheads is less, I'm saying. Like budgeted production is less.
Budgeted overheads is less.
Yeah, and actual is overheads are
Oh.
more.
Okay.
Absorption of overheads is based on actual expenditure and actual activity. This does not define under absorption or over absorption, so this won't be the answer. Then actual activity is above budgeted activity. Actual activity is more than budgeted.
So there will be over absorption.
Yeah, over absorption.
If actual activity is more than budgeted, so it will be over absorption.
Then actual activity is below budgeted activity. That'll be under absorption.
Actual activity is below. This is under absorption.
Yeah,
But
and
over,
actual
so this
is
is
as
no
budgeted.
absorption.
Yeah. फिर actual expenditure on overheads is below budgeted expenditure. That's wrong because budgeted is less than actual. So D also won't be. So C is closer to the answer.
Okay.
Yeah.
26.
Okay, so business has fixed cost 100,000 and it sells a single product for $25 per unit and its contribution to sales is 40%. So you have to find break even point in units. So first you will find break even point in sales revenue since you have the contribution to sales ratio. So 100,000 upon 40%, which will give you 250,000. Then uh, yeah. Then you need to find the number of units. So units into $25 will give you sales, which is 25,000. So 250,000. So you will divide 250,000 with per unit. So which is 25. That will give you 10,000 units of sales. So that's your break even when you're selling 10,000. Yeah.
Okay. Table shows company's estimated sales, trade receivable. This is budgeted, not in syllabus.
Okay.
Yes.
Yeah, so 26. Prepare a quotation to print 100 leaflets, and there is direct material, direct labor, and share of overhead $820, and profit of 25% on cost has been added.
This is an
Okay.
example of which costing method.
Yeah, so it's not absorption costing because you're
You're preparing it for a particular job.
yeah.
So is it job costing?
Yes.
Yes.
Yeah.
Okay. So you are making it for a particular job. That is why the costing that is used is what costing? Job
Job
costing.
cost.
Which page number was it?
83.
Okay. Let's go to the next one. No, it's not on page 83.
84.
Really? Okay. 27th one,
Yeah, so
total cost of raw materials. Okay, this is not there. The
हाँ तो
manufacturing.
but I did it anyway, I got it. Is it right what I did? बस एक हाँ.
28th.
Yeah. So variable cost is 50 and selling price is 80 and fixed cost is given as 90,000 and budgeted sales is 8,000 units. So you'll find the contribution. So selling price 80 minus
Formula
50,
of margin of safety.
actual minus budgeted.
So actual minus budgeted. No,
Budgeted, so
actual
you have to,
minus break-even point sales.
oh yeah, my bad, sorry. Break even points
So
in
8,000 is actual. No, break-even point. What is break-even point? Fixed
yeah, so
cost.
90 upon 30, yeah, so 90,000 upon 30, which is 3,000. So 8,000 minus 3,000, 5,000, option C.
This is 3,000 units. Break-even
Yeah.
point. So margin of safety is 5,000.
Yeah.
29.
A business has sales 250,000, fixed cost 50,000, contribution to sales ratio 30,000. What is the profit? So
First find
con
contribution to sales is 30% of sales.
so contribution to sales ratio is given. So 30% is equal to contribution upon sales.
So
You basically,
contribution will be how much?
yeah, 75,000.
250,000 into 30%. Yeah,
Yeah.
75.
Then you'll subtract. Nahi. So you have
Yeah.
to find the profit. So contribution is 75,000 and sales is fixed cost is 50,000. So 75,000 minus 50,000 will give you 25,000. So option A.
Okay. One limited company sum, October, November 2014. Paper 13. What was the retained earning at 31st December 2013? So I want to find the retained earnings on the last date. Okay. Profit for the year is 300,000. I start with retained earnings at the start.
1,000. Yeah.
Profit for the year is 300,000. Dividend paid 2.20 per ordinary share. So how
Yeah.
many ordinary shares you have? Can you find out?
Yeah. So 800,000.
You have 400,000 divided by 0.5. So 800,000 ordinary shares
To 0.20.
into 0.20.
160,000.
So 160,000 will go from retained earnings.
Hmm.
Ordinary shares dividend paid. Preference shares dividend paid is finance cost.
It doesn't come.
No.
Oh.
So your
Okay,
retained
then
earnings at
I
the
got
end of
found.
the year is
So
300,000 plus 4,000
1400.
minus 160,000. It's
Yeah,
140.
so
So it is option B.